All right, welcome to today's show. We've got big things happening in the market as always. The question is, will it go up or down? Most people are asleep at the wheel. We got the smart money making some moves right now, and BMNR just stacked some more Ethereum, so we're going to talk about that. MSTR just crushed another quarter, about $2.8 billion in unrealized gains, and they're now expanding into Europe, so we're going to get into that today. And the Fed's starting to put more money back in the system with the interest rate cuts. And December 1st, the quantitative tightening ends, and that's good news for the markets as well. So we're going to jump in to today's show with more, not tax advice, not financial advice, not legal advice. Do your own research. Let's hear from Tom Lee. Great. So here we go. Let's we were gonna get into Tom Lee, but it's not playing right now, so we'll do that in just a second. But basically, the message from Tom Lee is that what's happening in the marketplace right now is very interesting. To see that most people got freaked out by the interest rate cuts that took place, because the statement that the Fed made was that December is not a foregone conclusion for interest rate cuts. But what Tom is basically saying is that the likelihood of still having interest rate cuts in December is in our favor. There's a 62% likelihood still. He said that the job market is weakening and we are seeing some acts of deflation. And so it's likely that we're still going to have interest rate cuts in December. And then December 1st, we have the quantitative tightening as well, which adds to the story and makes it super, super interesting. So I'm going to get into all of this in today's show. If you have not gotten my book already, which is Money Game, I want you to get it down below. In the book, I talk about taxes, inflation, BMNR, MSTR, Ethereum, Bitcoin. I go in depth about what's happening in the economy and how the Federal Reserve actually works. And I'm going to touch a little bit on that in today's show. But also, you've heard me say it before, when the markets drop, I trade every day and make on average 5% per week. And when the markets go up, I win as well. So even while it's down right now, I'm still picking up a lot of shares of BMNR because that's the stock I'm trading right now. And I've been profitable the last 15 out of 16 weeks trading this stock with a minimum average of 5% per week. So grab the book. It's free. My trading strategy video comes with the book. So you can watch that and see exactly what I'm doing. And ultimately, I hope it serves you, because during down markets, it's a very, very important thing for me, at least, to have this strategy so I can be picking up shares and still winning when the markets go low. Okay. So let's talk a little bit about what this quantitative tightening thing means coming December 1st. I think it's also important to know that we just had 2 interest rate cuts, what that actually means. And I do believe that when somebody understands how the Fed actually works, how interest rate cuts actually affect the economy, how they affect consumers' pocketbooks, and why people move into risk on assets like stocks, like Bitcoin, like Ethereum, like BMNR, like MSTR. When one understands this, I think the outlook, which is very bearish sentiment right now, the feeling is bearish. But when you look at the actions of what's happening, there's lots of bullish news. Now, it doesn't show up in the stock price. We're not seeing it in the Bitcoin price right now. I'm not saying that at all. But I want to share the things that are bullish for the next couple of months, and also going into December 2026, going into 2026, because many people think that the 4-year cycle is over, and it is a different cycle. If you looked at my last video that I showed something called the MVRV score, and basically it showed the previous 3 cycles with Bitcoin in the bull run. And when you saw Bitcoin hit its top, it showed on the chart that Bitcoin was overheated at a certain point. And there was a gauge of like 0 to 10. Anywhere from 7 to 10 means Bitcoin's overheated and it's overbought, and then people are going to sell off. And you saw it in every previous bull run on the chart precisely. The moment it cracked the 7 mark, which means that Bitcoin is overbought, you started to see the market that was booming up and in euphoria just sell off, and that's when we had the crashes. We have not seen that in 2024 or 2025 yet. We have not seen Bitcoin go into that range where it's overbought. In fact, on the score, where typically when it's overbought, it's between 7 and 10, it's right between 2 and 3 right now. So it's not even close. So this is definitely a different cycle right now, because normally we would have peaks around the October mark. So we're in a totally different cycle right now. So that means that things could extend into 2026. I still don't think that we are over and done with the actual bull run. I think there's an extended move that's going to go on, and I still think the future looks good for Bitcoin, Ethereum, MSTR, and BMNR. So I'm going to share that news, why I think that today. By the way, somebody's asking about BMNR earning calls. That happens on November 14th. All right. So, and MSTR just had their earnings calls, their Q3 earnings calls. It was amazing. You should watch the video. Go check it out on YouTube. I showed in my last video the whole interview with Saylor in that, and it was fantastic. So when we get into what the Fed is really doing, and this is super important because when one understands this, they understand what's happening in the economy and ultimately what's going to happen with money. So here's the easiest way to understand it. All right. The U.S. government borrows money by selling bonds. Okay. So when the Fed buys one of those bonds, it's basically giving the government a loan. So in plain English, what that means is the U.S. government is like, Dad, and Dad's the Fed, right? They're like, Dad, I need some money. I need to borrow some money. And the Fed says, okay, son, let me print some money and loan it to you. And so that loan puts new money into the economy. Now, all of this to say it in short, and I'm going to say it again because it's a very, very simple thing. The U.S. government's like, I need some money. That's what the Treasury does. Like, I need a loan. Now, they dress it up as T-bills and they dress it up as a bond, but ultimately it's like, Dad, I need some money. Please print some money and loan it to me. Now, the circle of how it actually goes, to be simplistic about this, is typically you don't see the Fed give the U.S. Treasury the loan. What happens is you have private banks give the U.S. Treasury the loan. So the U.S. Treasury, the government's like, Dad, I need to borrow some money. The private banks that are in bed with the Fed go, no problem, son. We'll loan you the money. Okay. And then pretty soon, the U.S. government is now in debt to the banks because it's paying interest back to the banks on the loan. Now, the Fed comes in to the banks and it says, the Fed's like the grandfather. The grandfather comes in and it's like, okay, I don't want you holding those loans for too long that you just gave to the U.S. government. I'm going to buy the loans back from you. And so the Fed comes in, buys the loans back from the banks. The banks keep the spread and profit, and now the U.S. government is in debt to the Fed. All of this to say, when quantitative tightening is easing on December 1st, that means that there's going to be more loans going out to the U.S. government, which will mean that there will be more loans going into the economy. Make sense? Okay. So that's how the whole system basically works in a nutshell. So when quantitative tightening gets eased, that means more money goes into the economy, more loans are made to people. When interest rates get cut like this, that means there's more money going into the economy. And when interest rates actually get cut, there's more money flowing out there in the form of what? Well, banks start making loans with lower interest rates. People's car loans get cheaper. People's mortgages get cheaper. Business loans get cheaper. So that means that the consumer in the marketplace is like, oh, I'm paying less interest on my loans now, right? And the fact that I'm paying less interest, I have more cash flow in my pocket. And the fact that I have more cash flow in my pocket, that means I can go spend more. And for those of us who want to invest, we go invest more into the market, which is Bitcoin or Ethereum or stocks or what have you. Also, when the interest rates get cut like they are, people don't want their money sitting in banks or low interest rate environments. So they're like, I'm getting out of here because that's not going to keep up with inflation. So they take that money and they put it into risk on assets. So when you hear the conversation of risk on assets, that's stocks, that's Bitcoin, et cetera. Now, we've seen the increase already. It's what happens in the equity market. In the equity market, you've already seen with the S&P 500. The S&P 500 is up like 18% this year. And from Tom Lee's prediction, by the end of the year, it's going to go higher. It's probably going to break 7,000 on the S&P, and it's about at 6,800 and change right now. So all of this we've seen reflected in the stock market. We see AI stocks booming up. We see the S&P 500 booming up. And at some point with this lower interest rate cutting, which, by the way, if you missed the beginning of the video, there still is a likelihood that there will be a cut in December. The polls are saying about 62%, even after Fed Chair Powell's statement where he's like, far from it. We're far from, potentially making a rate cut in December when the time comes. So that shook the markets, spooked the markets. Everybody's like, oh my God, we priced in the interest rate cuts already that just happened right now, but it's not going to come in December. People sell off, they flip out. But it just doesn't change the fact that the interest rate cuts, they infuse cash into the economy. So whether the market got spooked, whether the sentiment spooked or not, there is more money going into the economy. And when more money goes into the economy, there's cheaper loans, there's more free cash flow into consumers' pockets, and consumers take that money and they invest it in risk on assets. Okay. So Bitcoin's time is coming. It just depends. Is it coming in the next month? Is it coming in the next 2 months? Is it coming in 2026? It would be highly unlikely that some of that money wouldn't flow into Bitcoin. We saw gold hit its top and run up to its all-time high, and then it dropped down by 10%. So everything's having its run. Bitcoin just hasn't had it yet, which makes me think that the run is actually going to happen. Make sense? Okay. And somebody's saying it's a complete bullshit system. I'm just going to acknowledge the comment and say I fully duplicate and understand, and I don't agree with the way the system works either. Okay. Because it's just the way it works is the way I just explained it. Okay. And I'll repeat it one more time so you get it. So because you understand this is the simplicity of it. It's tied up in loops and all these things. But at the end of the day, I'm going to say it one more time because if you get this, you're really going to understand. So when they say quantitative tightening coming in December 1st, that means that there's going to be more money going out into the economy, right? Okay. Because they're easing the quantitative tightening. When they tighten things, that means less supply of money in the system. But the simplicity, one more time, because it's just fascinating. Listen, I've researched this. It's all in my book. If you want the breakdown, get my book down below, because all of this is in my book and explains exactly how it works in a 5th grade language. But here's the 30 seconds. Okay. When you hear T-bills and things like this, all that is a loan to the U.S. government. And to me, it's like people I sit there, I'm like, T-bill, like, dude, like just call it a loan. It's a loan. U.S. government's like, Dad, give me a loan. But the Fed actually doesn't give the loan directly to the U.S. Treasury. And that's how they set the system up. So the Fed, the private banks will give the loan. So now you have the U.S. government is in debt to private banks, but then the private bank doesn't hold the loan. The Fed comes in, we're like, we don't want you to hold that loan on your books because now they have a loan that they've given out and it's on their books. We don't want you to hold the loan. We'll help you get rid of the loan. We'll buy the loan back from you. You keep the spread, they make money, and now the government is in debt to the Fed. If they just wanted to do it cleanly so there's the loan. But they do it in a loop, in a circle, and then the middleman's the banks, and the banks make money, and then the banks get their money, and then they loan it out to consumers, and then consumers get, when there's quantitative easing, consumers start to get more money into the economy and cheaper loans, right? Especially when interest rates are being cut. So that's the system. Now, when eventually, how does the U.S. government pay the loan back to the Fed? Your tax dollars. That's how it works. So your tax dollars flow back in. The government collects your tax dollars, and then the government has to pay back the loan. So when the government pays back the loan, some of it is getting paid back, the majority with your tax dollars, which then goes to the Fed, and the Fed gets paid back. Because remember, the Fed's holding the loan now. But now, when it's quantitative tightening, which is happening right now, when the government pays the money back to the Fed, and this is the kicker, man, you're going to love this, right? Okay. The Fed will, when it's quantitative tightening, they delete the money from the balance sheet. This just shows our economy. For anybody who's questioning what's actually going on in society and like, I want to keep my money in the bank, I want to keep my money in bonds, like, and they don't understand the new economy of Bitcoin and Ethereum and the blockchain and the scarcity of Bitcoin and even the scarcity of Ethereum. And they're trying to compare apples to apples. And they're like, I want to keep my money in the traditional financial system. The traditional financial system is what I'm explaining to you, right? And so the Fed deletes, when they get a loan paid back from the U.S. Treasury, they delete it from the balance sheet when it's quantitative tightening, meaning they're tightening the money supply. They delete it, which means that money's no longer in circulation. By a button, like if I press delete on my keyboard right now, man, they're deleting it. That's how the money printer works. But when it's quantitative tightening, when quantitative tightening eases, and the money printers turn back on, let's say, or let's not even call it the money printer, the quantitative tightening eases, then that money that got paid back to the Fed by your tax dollars, they go, we're not going to delete it off the balance sheet. We're going to put that money back into supply, and they put it back into the economy through loans, where the banks then loan out more money and then more money goes into the economy. So bottom line is December 1st, quantitative tightening ends, which will be more money into the economy. So why do you give a crap if you don't care about anything I just said, which you should, because this is how the system of the United States of America works, okay? In a nutshell. Well, why do you care? Because if more money's in the economy, then there's going to be more money. There's cheaper loans. And so people's pocketbooks free up and it's going to go into risk on assets. And that's the bottom line, okay? But wild, right? So you have a circle of how the money system works. And essentially it's your tax dollars that are going back in to then feed the circle that goes back into the economy. And then when your tax dollars aren't enough, which is true because that's why we're $38 trillion in debt right now. $1 trillion of debt gets added every 10 freaking weeks to the U.S., okay? And don't think that other countries are in any better shape. The money printers going on and on. Every country during COVID, if you look at it, they're all printing money, okay? So when you look at fiat currency, fiat, it means by decree, by statement of the government. So your economy is only as good as the statement of the government. Go take a look at Argentina. Inflation's through the roof. Venezuela is through the roof, okay? And inflation is not 3% here in the United States, despite what they tell you that it's 3%. You got to look at asset inflation, which is housing prices going up, which is cost for college tuition, which all of it is not included in the actual CPI. So the numbers you're seeing aren't the full truth. So when you look at the system is not in good shape. All of this to tell you, this is why I'm bullish on BMNR. This is why I'm bullish on MSTR. This is why I'm bullish on Bitcoin. This is why I'm bullish on Ethereum. And I'm going to show you why the banking system that I just described to you, the banking system, is actually moving onto the blockchain and why they're moving onto the blockchain. Okay? And so we're talking about like there's stocks and there's going to be stocks and equities and all those things moving onto the blockchain. But why are the banks moving onto the blockchain? And this is a fact. And I'm going to give you factual data of why this is actually happening, okay? Super important. The factual data, you cannot run from this. And so the smart money, where's it going? And we shouldn't even call it the smart money. We should just call it the big money. Where's it going? It's going onto the damn blockchain, okay? So whether BMNR or MSTR blow up in November or December in a good way or January or February, for me, holding these stocks for a longer time period, if it doesn't hit my goal, of my take profits goal, I just hold on to it. I have a longer term time horizon if it doesn't hit my take profits goals. But I believe and I know where these stocks are going long term because of the fundamentals and the soundness of these companies and their leadership, and also the flaw of the entire money system across the world, right? The flaw of the entire money system across the world. And so when you compare apples to not apples, oranges, apples of the current money system to oranges of the blockchain, there is no comparison. There is no competitive advantage of staying in traditional finance. None, zero, zilch, nothing, okay? It doesn't exist. And I'm going to show you why, okay? So when you take a look at this, that's what means when quantitative tightening is coming up. That's what means when the interest rates are being cut. So we understand all this and we go, okay, so if stocks are rising in the S&P 500, when is it going to happen for Bitcoin? Now, Bitcoin makes all of its gains typically in about 10 days of the year. So at some point, the gains might come into Bitcoin, and we're going to see a run on Bitcoin because it's been chopping, it's been sideways, and I'm not sugarcoating what it's doing because it's sitting right now at about $110,000. When's it going to happen? At some point, I think it's going to happen. I don't think the bull run is over because of what I just shared with you. There's too many indicators pointing in the right direction. We just haven't had our leg up. Now, whether it comes in the next 2 months or next year, I believe it's coming. Now, let's talk about Ethereum, okay? So when you look about Ethereum, of why Ethereum is quietly taking over, you have to look at where the big players are actually going. So if you watch some of my previous videos, you see that PayPal now has its own stablecoin. So when you look at why people are moving onto the blockchain, it's very fundamentally clear that large companies are moving onto the blockchain. PayPal has its own stablecoin, okay? BlackRock, the world's biggest asset manager, launched a tokenized fund called BUIDL. It's basically a money market fund. It's on Ethereum. Visa is settling payments in USDC using Ethereum's rails. JP Morgan, they ran a live blockchain trade, like an actual trade, like a test of a trade, which is built on Ethereum. So they traded it on a Polygon, which is built on Ethereum. Okay, so here's the reason. Now, I want you to look at the mathematics because I ran some number for you, but here's why the banks, they have to move. They have to move onto the blockchain. They're testing it to test the water, see, is it safe, is it this? But so many of the other finance companies are already on there. So JP Morgan, right, they're testing stuff. Why? Because it's faster, it's cheaper, and it's smarter to be on the blockchain. So right now, moving monies between banks is like sending mail through 5 post offices. It takes days and it costs a fortune. So they may not like the blockchain. They may go like, I don't like the hype. I don't like the crypto. I don't believe in Bitcoin. I don't believe in this. I don't believe in that. But at the end of the day, when you're sending mail through 5 post offices in your current financial system, and it's taking days to get there and it's costing you a fortune, at some point you're looking like, how do I save billions of dollars? So the blockchain lets them send it instantly and securely with no middlemen. When I say post office, I'm like, okay, I'm Bank A. I want to send it to Bank B. I need to send a message through the SWIFT system because that's what the SWIFT system is. The SWIFT system moves $11 trillion in money, okay? And so Bank A wants to send to Bank B. You got a middleman with SWIFT. You got another middleman. You got all these middlemen, and they're all taking a cut, and they're all taking fees. So when JP Morgan uses Ethereum's tech, it's not about hype. It's about cutting costs, and it's about upgrading the system, period, right? So here's why this matters. Right now, money moving through the banking system is slow, it's expensive, it's full of middlemen. So every year, global banks move about $150 trillion across borders, $150 trillion. And it costs them anywhere from a couple percentage points to do it. That's trillions of dollars in fees. Even if the blockchain tech only saves 1%, that's $1.5 trillion saved globally. So for them, whether they believe in like Bitcoin itself, Bitcoin really is a technology, right? Ethereum's a technology. And so they believe in the technology because it's faster and it's more efficient and they want to save a crap load of money. Now think about all the back office jobs that the banks have for people who are checking records, for people who are there to make sure the fraud's not happening, the people who are confirming trades, people who are settling payments. You have an entire infrastructure, not just of the percentage points when you move money from point A to point B that you're losing with a bank with a snail mail system. But at the end of the day, you have an entire employee base that literally has to do these jobs, and they're going to cut jobs. Unfortunate for the population across the world who's working for banks, but at the end of the day, they're going to cut costs because they're not stupid. If they cut even 10% of their operating costs, big banks like JP Morgan could save billions of dollars a year. That's just one bank. And across all banks, maybe $100 to $300 billion annually. So when banks say they're testing the blockchain, they're not talking about like crypto hype. They're not chasing that. They're chasing speed. They're chasing cost cuts. They're chasing efficiency. This isn't about necessarily replacing the banks, like the banks are going to go out of existence. It's replacing the old pipes or the old rails that move the money. So when you hear about Ethereum rails, the rails are faster, right? If I'm going to send money on the rails, like boom, from point A to point B, and it goes on the rails, at the end of the day, I want that money to move fast, efficient. I want to cut costs, and I want to do it at lightning speed. That is the blockchain, my friends. And that's why the banks are going there, because they are not stupid. And if they aren't going there right now and they're fighting it, then they are stupid and they have an agenda and they're trying to squash something that's good for the world, and they should be put out of business. Okay. So ultimately, there's the story. All right. So Ethereum's getting faster and it's about to get even better. The next big Ethereum upgrade called Fusaka. Fusaka is coming in December, right? So good news coming in December. We could have rate cuts, 62% likelihood that rate cuts will still be there. Again, Powell, there was a party happening and everybody was celebrating and having a good time, and they were like expecting 90-something% chance of rates being cut. And because he says one sentence, he changes the sentiment of the marketplace. People are like, oh, so the polls drop from 90-something% down to 62% that there's going to be a Fed rate cut in December. But ultimately, there's still good news. Quantitative tightening is ending in December. We've already had 2 rate cuts, okay? So what does this mean in plain English? The network's adding more lanes to the highway. Ethereum. Faster transactions, lower costs, smoother experience. So Ethereum's not just growing in price, it's growing in power, my friends, which is why I am bullish about BMNR. You've heard me talk about it on this channel. They launched back in July. If you're new to the channel, I'm a big fan of BMNR. I invested in MSTR back when it was $78. I'm still in massive profits with that. I'm still holding on to that stock. But BMNR is the next MSTR. There are no if, ands, or buts about it. 0, 0, 0. There's no if, ands, or buts. This is the next MSTR. This is. Okay? Now, what does that mean? It means it's volatile as all hell. Okay? Just like MSTR is vol. If you sat through 2024 in MSTR, do you remember if you held the stock before before the split? I remember when I was holding the stock and we went all the way up to $2,000 and we dropped all the way down to $1,100. This happened in 2024 when things were bullish. Okay, so MSTR moves like a rocket ship up and a crash back down. BMNR is the same thing in terms of theory because it's the next MSTR. It's just doing it with Ethereum. And it's got 2.8% of the supply already. So when you look at BMNR in July 1st is when they launched The BitMine Technologies launched. BMNR is the same thing as BitMine Technologies. Okay, BMNR is the ticker. So if you want to go look at the stock, BMNR, it's the ticker. BitMine Technologies is the name of the company. So when they launched on July 1st, July, August, September, October, 4 months, man. Within the first month, $1 billion of Ethereum. Now they're close, or no, was it 1 million? So I think it was within the first month, it was 1 million ETH. Okay. Now, if you look here coming into October, okay. Now, in October, they have $14 billion on their balance sheet. $14 billion. When you look at the rate of accumulation of ETH, and by the way, it looks like we're going to find out tomorrow, but it looks like they just bought another 7,000 worth of ETH, adding more to their balance sheet. So they keep stacking every single week. And the acceleration and growth of this company comparatively to MSTR, which I still love MSTR, and the Q3 earnings just came out, and we're going to talk about that in a second, because what MSTR is doing is game-changing. And MSTR, by the way, is moving into Europe now. So their financial products are going into Europe. Okay, back to BMNR. So what BMNR is doing is game-changing because they're stacking up ETH, okay? And they're stacking the supply so damn fast when you compare it to MSTR. They're stacking at like 15 times faster than MSTR ever stacked. In 4 months, they've got 13 billion in their treasury. With MSTR, in 5 years, they got 74 billion in their treasury. Okay. By 2026, I think in the first quarter, we're going to have $40 billion of the treasury in the treasury of BMNR. And I think in 2026, maybe the end of the first quarter or the second quarter, that BMNR will have accomplished their goal of 5% of the ETH supply. 5%, man. That's insane. Insane, okay? So why am I bullish on the stock? Because the fundamentals is why I'm bullish. Now, it's volatile as all hell. And full disclaimer on this, and I can tell this every time, I bought in at $60. I bought in was one of the highest price points. This was 3.5 months ago. I bought in. When there was hype on there, I watched the stock go up to $72 that day too, because it has been at $72 recently. And I'm not talking when it first launched and it ran up to hundreds and hundreds of dollars and then it crashed all the way back down. I'm talking about when it stabilized. It was at $30-something. I bought my first shares around $30-something, not a huge amount. And then I started watching it, and I'm like, and studying it and researching. I'm like, this is the next MSTR. So when the hype was happening, it was running up. I bought in at an average share price of $60. Now, I trade it every single day. So in trading it, I brought my cost basis down somewhere to about $46, $47 with BMNR, because when I'm trading it and the stock is dropping, for example, I traded it on Friday. My most recent statistics, I made $7,000 trading BMNR. I picked up $7,000 worth of shares. All right. So when you're buying $7,000 worth of shares and the price point is at $46 or $45, or you're buying $7,000 worth of shares and the price point is at $60, do you know what a difference that means? Because whether I'm trading high, I was trading when it was $60. I was trading BMNR was at $50. I was trading when it went all the way down to $40 in September and picking up shares, picked up a ton of shares when it was in the low 40s. Now it's back in the mid 40s. So I'm trading and buying and picking it up, which means I don't come out of my pocket with cash flow from my business to buy BMNR now. I put my initial amount in from other investments that I rolled into BMNR. So I put my initial amount in, and then my initial capital is in, and then I've traded to get a lower cost basis. And so when the markets are down, for me, it's on sale because I make an average of 5% every week. I know it sounds high. People say this to me all the time, 5% every single week. Yes, 15 out of the last 16 weeks in a row. I've shown my trading group this. I have a trading group that I run, and I'm teaching them exactly how to do what I do with the charts. And I make an average, a minimum of 5% every week, minimum, okay? Except the weeks where I lose, and I've lost 1 week out of 16 weeks, all right? So this stock is hot, which is why I keep picking it up and picking it up and picking it up, all right? What do I think has the most upside potential in the next several months? I think that BMNR has the most upside potential. I think MSTR is still going to go up, but I think BMNR, because it's new and because it's volatile, and because if you look at strategy back in 2020 when strategy came out, oh, and by the way, if you want my trading strategy, go down below and go grab it. My book is there. It's free. Get the book, an entire book on it, BMNR, MSTR, Ethereum, Bitcoin, and my trading strategy. There's a video that shows you exactly what I'm doing on the charts. It's not my trading technology. I just put two technologies together, and you can watch it. Anybody can go buy the trading technology from somebody else and go watch what I do, okay? So when you look at the spree of BMNR recently, and when you look at their run up in the last 4 months, remember, strategy started this in 2020, and strategy's gone all the way through 2025 with this strategy putting Bitcoin on the balance sheet. BMNR is brand new in the last 4 months of doing this. So who's going to be more volatile? Likely BMNR. Who's going to run up higher in the next year? From my perspective, I think likely BMNR, but I still hold the majority of my portfolio in MSTR, just so you know that, okay? All right. So that's what I think. Now, the markets could dump. It could crash. If Bitcoin goes down below 100,000, you could see strategy in the low 200s. You could see the BMNR go below 40 and break down into the 30s. That's all possible. So you have to be prepared for what happens with these stocks. And one who does not have the stomach for volatility, in my personal viewpoint, if I did not have the stomach, I would not be in these stocks. But I want the upside volatility. I just showed you how the Fed works. I just showed you how the money printer works. I just showed you how the U.S. economy works. Other economies work in a very similar fashion. So ultimately, I don't buy into the current financial system. One can not get ahead with 12% rates of return in the stock market. And the fact that the S&P 500 is up 18% this year, it tells a story. Will it continue that way? No, it's having a hot year. So maybe next year it cools off and it does 15 or 14%. When you have taxes, you have inflation, you have asset inflation, you have management fees, 12%, and you're bare, like 12%, you're snorkeling, dude. Like your head's not above water, you're snorkeling. All right. So if you're in the S&P 500, you're averaging 15%, you're really making 3%. All right. So the current system, the reason I'm in these stocks is one, I've highly researched them. I got into MSTR early. I'm way up in it. I got into Bitcoin when it was $3,000. Bought Bitcoin at 3,000, 10,000, 20,000, 30,000, 40,000, 50,000, 69,000. It dropped back down to 33,000, put a whole bunch of money in November and 33,000 bucks and have rid it back up. Okay. So I haven't bought any Bitcoin past the price of like $67,000, $68,000. All right. Okay. So that's where I hold. Bitcoin's my second largest portfolio value. And then I have BMNR. And those are the three that I hold right now. Okay. So that's what's basically happening in the marketplace. And so you look at the current economy and it just it doesn't like it. Here's the thing. They've been telling this story, guys. I was in financial services at 21 years old. They've been telling this story about 12% rates of return for the last 20 years. Now they were probably telling it before this and it doesn't hold up. I was in the financial firm, trained by those financial services company. I was a partner with the financial services company. I was outside searching for systems outside the company because I didn't believe in the systems inside the company. True story. I'm like, this doesn't make sense. And so ultimately, they've been selling this story, and you got to wonder for how long when somebody sells a story at 12% over time is good. If it was so damn good, why can't people retire? Which leads me to the next scenario with this. And by the way, with BMNR, to finish the cycle on this, they've got they just added more Ethereum to their treasury. And statistically, if I just take a look at this real quick, statistically, they're in next year, they'll probably hit their goal around 6 million ETH. So they're about 57% of their goal to the 5% supply of Ethereum. All right. So plain and simple, their strategy is they're going to keep buying ETH. Eventually they're going to stake it. And here's a whole nother thing of why, like if you haven't noticed that I'm super, super bullish on BMNR, I'm kind of giving the clue away. When they decide to stake on the Ethereum network, okay? So when they decide to stake their Ethereum, they're going to get paid out they're going to get paid out a staking fee. And so that could be anywhere from 3 to 4%. And so if you look at the amount of Ethereum they have on their balance sheet, let's call it $10 billion. It's actually 13 billion. So let's just do the math. 13 billion ETH. And if they get a 3% staking fee, that's $400 million of revenue. Okay, which makes this a little bit different than Strategy because Strategy just reported their Q3 earnings and it was $2.8 billion on unrealized gains. So it's not actually showing up for Strategy because they're not. It's not like BMNR will show it as income. It will be pre-tax income of $400 million a year. Now imagine that BMNR's treasury of Ethereum on their balance sheet goes to $40 billion. With a 3% staking fee, they're bringing in $1.2 billion of cash flow every single year of pre-tax income. That's insane, dude. So you don't think that the valuation of their company is going to go through the roof when they start doing this? Absolutely. Which is another reason why I'm bullish about BMNR. Yes, I know the stock is down. Hey, I would have given, my left eyebrow to buy the thing when it was at $46 initially. I bought it at 60. I traded every day, and so I'm picking up more shares almost every single day at these low price points because I trade it. So you could call it that I buy the dip, but I buy it with trading, not cash flow out of my pocket, which to me is the best way to do it. Okay. So with that said, where were we? Okay. So the earnings call will come out for BMNR, which will be interesting on November 14th. You're going to have the earnings call. So that will be positive news. Absolutely 100%. That'll be positive news in November, which we need some more positive news that actually moves the markets. Then you have MSTR. Let's talk about MSTR. Despite the fact that I've been covering a lot about BMNR, on my last video, I talked all about the earnings report of MSTR, and I touted and just praised what Saylor's doing. But if you look at their profits, $2.8 billion in Q3. Revenue's up, okay? Their Bitcoin holdings are worth $1 billion, about $74 billion. And so just in a nutshell, number one, they are going into the European market. So when Saylor says they want to eat the world, because that's what he said he want MSTR, it stands for monster. This is what he said in the Q3 earnings report. Number one. Number two, he says, we want to eat the world. They're going into Europe now, right? Now, what gives them the ability and what gives them the competitive edge when they go into another marketplace to absolutely eat the world? And when he says eat the world, they're going to eat the bond market and they're going to eat the money market as well, okay? And the way they're going to eat the world is really, really, really super simple, okay? So let's not get caught up in the in the words or the vocabulary of what these actual products are. Let's just explain them holistically so we can understand. So we know that MSTR basically offers up common shares, which is what I hold in the marketplace, okay? Which means when you own common shares, when you own the stock directly of MSTR, basically it's volatile as all hell. This thing could go up 30% in a week or down 30% in a week. We know it's been down in October, all right? Now, I've lived through this, and I started buying MSTR, just so you know. I bought, just to support Saylor in 2020, I bought shares, right? And then eventually I sold those shares. So I should have held on to them, but I didn't, okay? So I remember, I've been following Saylor since he came out. I've been in Bitcoin since it was $3,000. And so I remember watching what they were doing early in 2020. And so when you look at the volatility of the stock, I've lived through it in 2020. I lived through it in 2021. I rebought big back into MSTR in 2024, and it was volatile as hell in 2024. So when you look at what they're doing as a basic strategy, and it's important, if I'm going to own this stock, I need to understand what the hell they're doing, because that would give me conviction, even in the volatile times, to know that long-term, if I hold this stock, I believe personally it's a winner. Okay. Doesn't mean I won't take profits when it hits the price that I want, but long-term, I believe it's a winner. Now, in his Q3 earnings report, Saylor says, if you're going to hold Bitcoin, you have to have a 4-year time horizon. If you're going to hold strategy, which is amplified Bitcoin, you got to have a longer time horizon, maybe like 5 years. Okay. So when he talked about his Q3 earnings report, he said, what they're doing with their financial products is really simple. You have Strife, you had Stride, you have Strike, and you have Stretch. Those are 4 products. And so for people who don't want the volatility of MSTR, they put their money into those products. Why? Because they pay approximately 10% a year. And if you look at the mission of this company, which is why I invest in companies I believe in, but I also invest in the leadership. I check out the leadership. Do I believe in the leadership? There's leaders and there's people, and I won't mention names, who are have been phenomenal investors and have phenomenal companies that I wouldn't put a dime into their company because I don't believe in the leadership. I believe in this leadership. I believe in Tom Lee's leadership. I believe in Saylor's leadership. And so when you look at what strategy's doing, one of the most important things they said, at least for me, was that the plan with these other products, which are paying about 10%, is they want to help billions of people retire. And if you're think about your father or your grandfather right now, or for those of you who are younger, your great-grandfather and your grandmother and your mother, who's worried and stressed about money, a 5% bond ain't going to do it. A 5% CD is not going to do it. So Saylor brings up the very, very important part is if you can take these products out to the marketplace, which, by the way, how is it good for you? You're like, what do I care about those products if it is not good for MSTR? The reason it's good for MSTR is when they say, hey, buy our preferred stock, which is what those actual products are, their preferred stock, and they issue it in the marketplace. And the simplicity is hey, I'm going to issue some Stretch. Somebody goes and puts their money into Stretch. Strategy takes the money, and it's called a credit instrument. So when you hear credit instruments, I don't like terminology that's too advanced for me. Credit instruments too advanced for me. Okay. So when they give this credit instrument, which is Strike or Stride or Stretch, and they say, okay, put some money into my credit instrument, they're basically saying, give me some money, and a credit instrument means a promise to pay. That's all it means. It's my promise to pay you back 10%. So when they give strategy that money and they promise to pay 10% out, which is what a credit instrument is, they're taking that money and they're buying more Bitcoin. So for you as a common shareholder, you like that because you're now they're increasing their Bitcoin stack. And when they're increasing their Bitcoin stack and they have more Bitcoin on the balance sheet, they now have a pristine asset on the balance sheet. And so these financial products like Strike and Stride and Strife and Stretch that they're now issuing in the marketplace to say, hey, take my product, I'll pay you 10%, give me some money, allows them to increase their Bitcoin holdings. And why do you like that? Because it's good for the company. And also you like it because the company doesn't have a lot of debt. They got like $9 billion of debt, $74 billion of Bitcoin. And so when you compare that to apples of another company that doesn't have Bitcoin on their balance sheet, what is that company backed by? Another company goes, hey, buy my bonds. Or the other company says, get my bonds, loan me some money. So another company's like, loan me some money. Okay, that's a bond. So another company goes, loan me some money and I'll pay you 5%. But that company's promise to pay back is only as good as their reputation and is only as good as their balance sheet. So what balance sheet would you rather believe in? A balance sheet that's backed by Bitcoin or a balance sheet that's backed on fiat currency with a promise to pay? I'd rather bet my family's future and their retirement, right, on a Bitcoin-based balance sheet, because I know a strategy continues to do what they're doing over the next 5 years, 10 years, that retirement for my family that's going to put 10% in Stretch. And by the way, I have a call with my family tomorrow to meet with their financial advisors to sit down with them and go, some of this money needs to go into this product. Not financial advice, but if it was me, that's what I would do. And that's what I'll say to them, okay? So ultimately, you look at the comparable magnitude of this, and why will strategy be one of the most dominant companies on the face of the planet in the next 5, 10, 15 years? Because of this. And you can't compete in traditional finance with a company whose number one mission is to help more people retire. It's not to nickel and dime you on fees and say, hey, or nickel and dime you and say, hey, I want to pay you out the lowest amount of interest rate possible. It's to actually pay you the highest amount out possible, which is 10%. And on some of their products, one of their products in particular, the payout that they give when they pay you the 10% is tax deferred. So it's equivalent to a 15% pre-tax payout. I mean, would you rather take a shitty bond at 5% that's going to be taxable in retirement, or a 15% equivalent to it? It pays 10%, but because there's no tax, it's equivalent to a 15% taxable vehicle. What do you want to have with a Bitcoin backed by a Bitcoin balance sheet backed, a balance sheet backed by Bitcoin? What do you want? It's a no-brainer. So the future is endlessly beautiful with this company strategy. The leadership is extraordinary. Extraordinary. You should go watch the Q3 earnings report. You can go watch my last video that I did. It's in there. I chopped out like 10 minutes of it that's relevant, so you don't have to watch the whole hour. Go watch it and check it out, because you'll see the whole talk that Saylor gives. He wants to help people retire. That's it. That's one of the missions of the company. And then when they go into Europe and they offer up these same financial products, because they announced they're going to Europe, guys, and they take these same financial products to Europe, who has the same problems as us. Don't think that they're not affected. They have the same problems. They have the same money printing problems. When he goes in there and he offers these products to their people, so their people can actually retire, it's going to change the financial landscape. And ultimately, yes, one should get, if they want to preserve some of their capital in retirement, like I was saying before, if you're not earning 10 to 12%, like, you don't have your head above water because of taxes, inflation, asset inflation, and management fees. So at least if somebody wants to preserve capital in retirement and keep their head above water and put their money in Stretch or Stride, they're at least getting that 10% payout, and in some cases 15% equivalent of a taxable asset. Okay, so that's what's happening in the marketplace right now. You have an entirely new financial system that is literally springing up under your eyes, and this is where the big money's going. All right. And institutions, there's no wonder why 60% of the money invested in strategy is institutions. 60%. And by the way, you've heard this before. Tom Lee has said this about Michael Saylor, and I love their relationship because they support each other and they talk good about each other because they're not competing. Like, Ethereum plays an entirely different role than Bitcoin. Bitcoin's digital gold. You take your monetary energy, you work your ass off, and why would you want to put your money in a bank account? Okay, you work your ass off. Why am I going to put my money in a bond? I'm losing money when I do that. You take your hard-earned capital, and they call it a store of value, because over time, you can store the value of your money. It doesn't mean you're going to take your hard-earned capital and put it in, and all of a sudden in 60 days, you're going to get rich. It means you store the value of your money over time. So Bitcoin plays a totally different role. And then you have Ethereum, which is it's like a new digital financial city, where all the financial companies are like, I'm going to put buildings on top of Ethereum. So imagine like this financial foundation, right? And then you have all the banks coming in like, I'm going to build a building on top of this digital city. And the brokerage houses, I'm going to build a brokerage house on top of this financial city. And so they're building on top of the financial city because it's cheaper, it's faster, it's more secure, it's more efficient. They're going to save billions of dollars. They're going to cut jobs, and they're going to put more money in their pocket. All right. So I think when you have a business model that is abundant, like Strategy does, when you have a business model with BMNR that's abundant, because the new financial system is abundant, you can then start looking out for the greater good, because you don't have to sit there and skimp on everything that you're doing and pay your customers out the lowest amount and barely have them survive. Now, the mentality should always be, I'm thinking about the greater good and I want to help people. But when you look at the current financial system, it is not built for the greater good. Let's just call a spade, man. Okay. And if it works so damn well, why is the majority of the world in debt? So now you look at a new financial system and you look at particularly Saylor, who I believe wants to do good for the world. And he has an opportunity because it's abundant. Bitcoin is abundant. It's scarce in terms of the amount of coins that are available in the marketplace, which, by the way, there's 19.4 billion coins out there. There's only 1.6 billion that's left. And so it's already a scarce asset, and it's a finite asset. So when you have a scarce and finite asset, that means that it's going to create an abundance of value in the future because it is valuable. There's always the debate of like, well, the traditional finance is this, and why am I to put my money into Bitcoin? It's like, dude, your traditional financial system is built on nothing but the decree and the statement of your government. That's all it's built on, and it's built on a money printer. That's it. And it's built on debt. And they're not going to change the strategy. You're just going to recycle and recycle and recycle. And your tax dollars are going to pay off the debt, which then gets recycled and gets loaned back into the economy. So essentially, the loan that you're getting right now, the car loan, is tax dollars that you paid and they recycled and loaned it back out to you. If that's not a broken system, I don't know what is, guys. Okay? So tell this to your family. Give them my book. Go download it. Give it for free to your family and say, go read this damn book, because it shows them the current holes in the financial system. Because your family, who's older, most of them, I told you this before, my 82-year-old stepdad, he now owns Bitcoin. Why? Because when you explain the problem first and you show them the problem, then they jump ship. But if you just go, Bitcoin's the greatest thing, Bitcoin's this, they're not going to jump ship. Okay? So you have to explain to them the problem. And this is the current problem. And this is why Strategy is going to eat the world. This is why Strategy is going to go into Europe, and it's going to dominate the marketplace there. And this is why it's going to be hard to find any company on the face of the planet that can actually match Strategy's rates of returns that they're paying 10% on their financial products in the marketplace, which is why it's good if you're a shareholder, common shares, in the long term, this is good for you. And this is good for me, which is why I continue to hold the company, because they're bad freaking ass, man. And BMNR is like the new badass in town. It's like the cool kid who just showed up in school. BMNR is like, I'm the cool kid showing up. I'm doing this way faster than Strategy. But the reason they're doing it fast in Strategy is because they had a great mentor, Michael Saylor. And it took the bold to dive in and say, yo, I'm going completely against what's happening in Wall Street. And if you don't know the history of Strategy, you should get my book and read it. But I'm going to give you the blurb on it right now. Like, they were sitting on $500 million sitting in their freaking bank account. And when COVID hit and they saw that the interest rates started to lower, and this is exactly why money moves into risk assets, super important, because the interest rate cuts that just happened, my friends, they just happened. When the interest rates get cut, people who are putting their money in safe assets that are paying now lower interest, right? They're moving their money out of safe assets because they're like, dude, I can't keep my money in this. Interest rates are going down. It's not worth it. So they move into risk on assets. This is why this is good for the potential bull run that's coming up, or at least extended into 2026, which is why I believe that it's not over. So when you look at this, this is what Strategy did back in 2020. They saw the interest rates get cut. Why? Because of what happened with everything going on with stimulus and COVID and all of that. And so they were sitting on a $500 million melting iceberg. That initially they were getting a 5% payout, $25 million a year. But Saylor started to study. He did the research. He had conversations sitting by his pool, talking to one of his COOs and going, hey, like, tell me more about this Bitcoin thing, or talking to one of his friends. And when he started to look at it, he's like, I am sitting on a melting iceberg. He goes, I can literally weigh out my time and I can stretch it out and eventually stay in this 5% melting iceberg where I get 5% on my 500 million, which then when COVID hit and the interest rates went down to 3% and then 2%, and he was getting lower and lower, I'm on a melting iceberg. So I can literally like sit my time out on the melting iceberg, where eventually the company will be out of business, to watch his life's work of $500 million that they built up in their treasury to be melting. He's like, the only choice was to go into Bitcoin. And he looked at gold. And when he looked at gold, and these are Michael Saylor's words, he's like, I looked at gold, and gold gets mined, 2 to 3% more gold gets mined every single year. So if you have something that's getting mined more of every single year, and by the way, they just found a gold mine in China that's worth $82 billion. So to think that gold is fully scarce, gold, they're finding more gold, man. They're going to still find more gold. Then they might mine gold from meteors. Gold is not as scarce as Bitcoin, not even close. Okay, not even close. So he looked at gold. He's like, well, if they print 2%, if they mine 2 to 3% more supply of gold every single year, he goes, that means in about 33 years, I'll lose a huge percentage of my gold value. So I'm not going to put in gold. And that's when he chose Bitcoin. And so if you look at this as a consumer, if you look at this, somebody like you and me, and we're like, okay, if we're sitting on a melting iceberg too in the current financial system, for a family member, somebody you know who's sitting on bonds or sitting on CDs, they're sitting on a melting iceberg and they don't even know it. But they're happy to bleed on the Titanic because they're like, oh, we're sipping tea on the Titanic. It's fantastic. It's wonderful tea. It's all right. We have a leak in the ship. No big deal. It's cool, right? We'll just sink in the next 5 hours, not now. And so that's the traditional financial system. People will sink over the next 5 years or 10 years. And they won't even know what's happening. And that's what's happening. You have a blunder of a total freaking confusion in traditional financial markets because they don't understand how the Fed works. They don't understand how the money printer works. And they don't understand that you cannot get ahead with 10 to 12% rates of return per year. You cannot get ahead. Mathematically, it does not work. But if they continue to sell you the story, like they sold me in financial services at 21 when I first started in the business. I've been in this business for decades, okay? When you buy into the story that 10 to 12% rates of return is good because somebody told you it's good, and then you spread the story to the next person, all of a sudden you wake up one day and the entire society believes that 10 to 12% is good. And when the S&P 500 is doing 15%, I'm crushing it. But how is the S&P 500 doing 15% mean you're crushing it when new investors come in and the printing of money jacked up the stock market, and now the stock market is more expensive for new investors who want to get in the game, so they think they're buying in, and I'm getting 15%, but because of the money printing and all the money that got printed in society, is it really 15% rates of return on what happened over the last 4 years, right, with the money printer? Or is it kind of equivalent to the 12% story that they were selling you over the last 2 decades? So you got to look at the fundamentals of like, why is 12% based on truth? You've heard it before. Your financial advisor probably told you it. Your family members are like, if I can get 10 or 12%, and then when they get to retirement, they're happy. Like, if I could pull 7% off my investments per year, yeah, welcome to the doorway to poorness. So that story needs to die, man. It needs to die because it's dead. It was never true. It was never true. It was just a story that people bought into. Okay, and you can trace all this back, man, to all, you go back to the money and civilizations before. The Roman Empire was fudging gold during the Roman Empire. It's not the only reason for their decline, but it's one of the reasons their money system. They were putting tin into the gold. So this thing of diluting the money supply and making fake money, it's not a new thing, which is why you need a set of rules that's not necessarily controlled by a government, which is controlled by people, but you need a set of rules which is backed up by thousands of computers around the world that all agree on the same set of rules that allow humans to play in the game and touch and do the things they need to do, like buy a Bitcoin and have it and hold it. But you need a set of rules that cannot be changed. Okay. And you're going to be hard pressed to get the rules on the Bitcoin network changed. All right. You need that set of rules because it's a set of rules that puts in check ethics. And anytime you let humans that we've seen in history run around and make up their own set of rules, they do the wrong thing, man. In the main, in the majority, they do the wrong thing and they dilute the money supply and they print the money supply and it screws the population. And this is what's happened. So now when you have Bitcoin that comes in with a set of rules and regulation that's put in that's not controlled because it's decentralized, which is the most beautiful thing about Bitcoin, which is why it's different than any other asset on earth. And it's different than Ethereum because you still have control on the Ethereum network, which I love, and I own a lot of BMNR, but you still got control going on by a central organization. When you have central organizations, you have humans involved in it who aren't ethical, and I'm not saying they're not. I believe they are ethical, but someone will come in and they'll muddy the waters. And all it takes is one person who has evil intentions to get into a good group and muddy the waters and destroy the company. Okay? Now, the fact that the blockchain has a set of rules and Ethereum is based on smart contracts and has these protocols in place makes it a hell of a lot better than a centralized organization that has none of that. So you compare a centralized organization like, I'm not going to name the companies, but you know all of them are out there. They're controlled mainly by people, central organization that don't have the blockchain. You're in for a rude awakening. Now you have a centralized organization, which Ethereum is, because it's not decentralized fully like Bitcoin, and you have it run by a leadership that believes in prosperity and abundance and a set of rules. Then hopefully they keep the rules intact, but nobody's going to mess with the rules of Bitcoin, which is why Bitcoin is a superior asset on the face of the planet, period. End of story, no arguments with that. Okay? So we need a new set of rules. We need a new set of rules. It ain't been good in a long time. You know, when the Fed came into existence in 1913, when it got voted into existence, that to me, like there was in the story of it, there was good intentions of why that was supposed to happen in terms of what was told. And there may have been some intentions that were good. There may have been some that aren't. You do the research. I'll let you come up with it. But since 1913, this went into place, and you started to see what's happening with the U.S. economy, and you start to see that the money printer's there. And then when we got taken off the gold standard in 1971, that was the end. That was it. That was the end of the value of the dollar. And everything else since then, you had Wall Street spring up because the fake dollar allowed Wall Street to create all these products that allowed the dollar to stay dominant in the world, because all these products they sold out into the marketplace and pushed in the marketplace. But in essence, it made the dollar not worth anything because it wasn't backed by anything. All right. So when you go out in the marketplace and you hear people talking about the dollar's not backed by anything, the dollar's not backed by anything, or the Bitcoin's not backed by anything, Bitcoin's not backed by anything, it's not backed, it's not worth anything. No. Bitcoin is based on a set of rules, protocols, scarcity, being finite, with a superior technology. The US dollar had its day. It will continue to be used because it's currency, no problem. It will evolve and hopefully go onto the blockchain like it is backing up US stable or backing up stable coins. So now they're in bed with the stablecoin market. So it will continue to evolve. It will continue to be there. Hopefully it'll stay strong because it would be bad for the rest of the world. But at the end of the day, that story's been told, man. That ship has sailed. It's time for a new era. And the new era is Bitcoin. The new era is the blockchain. Projects like Ethereum, projects like Solana. I'm not saying there's other projects, but you know, where is Wall Street going in the main right now? They're going on Ethereum because it's trusted. It's been around longer. And they're already building on it. So at the end of the day, the moral of the story is this, in summary of everything that I talked about in the last 45 minutes or so. In summary, number one, the first thing to look at is, yes, we're not sugarcoating. There's bearish sentiment in the marketplace right now, right? But the way that I believe that you start to get bearish sentiment turning in the marketplace is giving people the fundamental understanding of what's actually happening. And what's actually happening factually is rates have been cut twice. Number one. What's fundamentally there on the polls is there's a 62% likelihood that rates will cut on in December. Next, quantitative tightening will end on December 1st, which will bring more money into circulation in the economy. So all of that means that there's going to be more liquidity, which basically means there's more cash in the economy. The interest rates will go down, and you'll have more free dough in your pocket, and so will other investors to invest. That's the bottom line of what's happening. That is happening right now. All right? Now, we haven't reaped the benefits, those of us in Bitcoin and MSTR and BMNR and Ethereum. Gold has, S&P 500 has, AI stocks have. So that is what's happening in the marketplace. So if there was like bad news where rates aren't being cut and all these things, I wouldn't have a bullish sentiment. I'm not saying the environment is bullish price-wise, but I wouldn't have a bullish sentiment because I'm like, the indicators aren't pointing to it being bullishness. And then you look into account and you take into account that the number of companies that are already on Ethereum building, the number of banks, and why it's good from the banks. I laid out the data for you. Okay. The trillions of dollars that move through the banking systems, they want it cheaper. They want the fees less. They want to cut out the middlemen. And at the end of the day, they want to waive those percentages that they pay for moving money. It'll be so much cheaper on the blockchain, and it's more secure, and they'll need less employees to then execute fraud checks and checking on settlements and checking on trades. They'll start to eliminate employees, which I'm not happy about because I want people to have jobs. But at the end of the day, they're going to be happy about it, and they're going to do what's good for their own pocketbook, and they're going to save money. That's why they're moving on to blockchain. Those are the facts. Next facts, strategy, Q3 earnings. They are crushing it in their earnings. Okay. Next facts, strategies, credit instruments, which is basically give us some money. We promise to pay you back. Strike, stride, strife, and stretch. Ultimately, those instruments beat the shit out of bonds in the marketplace. And they are going to go, when he says we're going to eat the world, he's saying we are going to eat the bond marketplace. Even if we just take a little slice of the piece or a nibble, lots of trillions of those dollars, $300 trillion in the bond marketplace, right? In the fixed income marketplace, $120 trillion in the money market. They're going after it, guys. And any logical person who starts to understand the story we're telling is not going to sit here and look at a 5% rate of return in a shitty bond versus a company who has Bitcoin on its balance sheet and is willing to pay you 10%. Once the story gets out of the truth, this is the new story. The old story was telling you that 10 to 12% of the markets are good, which it's not. That was the old story. Now the new story is strategy going, our money market funds, our fixed income instruments, basically, they're kind of fixed income instruments or preferred stock, our fixed instruments are paying 10%. That's comparable to the old story of the stock market, guys. If that is not writing on the wall, though the world's changed, I don't know what is. All right. That will be the new marketplace. And then the new world of people who want to get increased gains over time will say, I now know that the old story of 10 to 12% in the stock market is not good. I'm going to go looking for new avenues. And if Saylor's right with his prophecy that Bitcoin will do 29 or 30% over the next 20 years, you will see a $20 million Bitcoin. I'm not saying it's going to happen, but the S&P 500 is doing 18% with the old system. So with the new system of Bitcoin being one of the most valuable assets on planet Earth, if it does 29 to 30% a year, you're going to see $20 million Bitcoin. What if it only does 25%? Do the math. What if it only does 20%? Do the math. It's still outperforming everything else in the stock market in terms of the S&P 500 and the benchmarks. So, and Bitcoin's done way higher over the last 5, 6, 7, 8, 9, 10 years, but looking out 20 years, that's the future of the new economy. And then all the financial institutions are going to move to the new technology. And then when AI is integrated into that, which it's already being integrated into it, okay? So when AI is integrated into it, because it has to, we also have to have security measures to make sure that people aren't getting fraudulent charges, fraudulent hacks, fraudulent stuff going on the blockchain. So there's a whole nother infrastructure that's coming in that's going to be built on the blockchain, which is already being built by Sam Altman's company. WorldCoin scans your eye to see that you're a real person. So now when you log in with your code, you basically got cryptography. You got a code on your phone based on your iris. Your iris disappears. Nobody can track it. You got a code. So when you log into the blockchain, it recognizes the code that's based on your eye scan. Already happening. It's already happening in the marketplace. 17 million people have already subscribed to go get their eyes scanned. The writing is on the wall. Right now, I don't have a crystal ball. What the hell is going to happen in 30 days? Moonvember could be called Crapvember. Who knows? I don't know what's going to happen with it. I'm still bullish. Okay, but that's just my optimistic side. I'm based on what I'm seeing with the data that's happening. But we could, strategy could drop down to 200. It could happen. It's real. Bitcoin could go down to 90,000. Okay, it could also go up. But fundamentally, the future time horizon of these assets, it is the new money game, hence the name of my channel, Money Game, right? So I hope this serves you. I hope during this time you're holding strong, because I know how difficult it can be. So all the excitement that I have and all this stuff, I'm in the same position as you. My stock has dropped. Now, very different positions depending on when you bought it. But for example, my BMNR portfolio, when I bought it, was at $60. So if you bought in at 55 or 45, like you bought in lower than me. I bought in 3.5 months ago when it was freaking brand new. So wherever you are, I get your feelings on BMNR when it goes down, because I have the same situation, even though I trade every day. And I've lowered my cost basis, or my average price, from $60 to around 46 or 47, because I make money every day trading BMNR, right? So I have a strategy, even when things are dropping, to still win and stack up. So then we do have a run, I win bigger. And I want the same thing for you. So my best wishes on this Sunday to your family. I hope that for you and your family and everybody that you care about, I hope that November is incredible for you. I hope that happens. We'll see what happens. I hope that December is just as good, and I hope that we run into 2026, and it's very, very bullish for your portfolios, and I hope you win big, okay? So other than that, if you want to get my Money Game book, it's down below. Go snag the book. I'm super proud of this book. It took me like 6 months to write it. I did tons of research into the Federal Reserve, because I wanted to know fully how do they work, all right? Because I want to know how the money system works. I have a basic philosophy that if I'm trying to invest in something and I don't understand the source of it, then I won't fully understand the thing I'm invested in. And the source of the U.S. economy is the Fed in terms of the money printer. So I wanted to clear up any confusions I had around how the Fed works to see how this money system works. So I put it all in the book. I wanted to clear up. I mean, I've known since I was 21 that 401k plans was not for me at all. Okay. And so I show you what's going on in your 401k plans. I show you why they tie up your money and tell you they're going to give you a 10% penalty. I break it all down. This is knowledge that every person on the face of the planet must have. I show you what Bitcoin actually is, from the genesis of how it was born to the aspects of it that people don't understand, to the simplicity of it, to how the code works, all of it in 5th grade language. I show you how Ethereum works. I show you all about MSTR and all the research I've done, all these shows I put into a couple chapters. It's there. And you just go and you look and you finally understand MSTR. And then I show you BMNR and why BMNR is so damn hot and why it's the next MSTR. And that's all in there. So it's all in there. I tell you a little bit in my book about my trading strategy, but I attached a video to it that explains in depth my trading strategy, what I'm trading, how I'm trading, it's BMNR, and how I'm picking up on average of 5% per week. So I wanted to make this available to the world because I created this channel for a passion. That was the primary reason why I created it. I was like, I just got to start sharing this stuff because I was getting all my friends into Bitcoin at very low prices, man. I mean, my brother and I were talking when Bitcoin, I bought in at $3,000 for my first several coins. And then when COVID hit, I called my brother, the first one I called. I'm like, dude, I'm going all in. The price was around $7,500. I'm like, I'm in, dude. I'm stacking. I'm going way in on this, and I'll tell you this is why. And then I started telling all my friends. Heck, my girlfriend, who knew nothing about money, she was looking at her portfolio today. It's ridiculous. I got her into Ethereum in 2020 into Bitcoin in 2020. All right. So I've got my family members I got in at early prices. And so I started sharing this because I was doing so much good for the people around me. I was like, I need to do good for the planet. And that's why I created the channel. And then all of a sudden, as I started to see how interested people were, I should write a book. So I wrote a book. And then people started asking me. I got 60,000 business clients around the world. My other brand is I teach people how to grow their businesses through speaking, through marketing, online marketing, through sales training. And so I've got hundreds of products that teach people how to grow their business. And in my 60,000 people purchases of my products around the world, people are like, dude, how are you doing it? Like, please show us. So I started teaching in a trading group of like, here's how I'm trading. So we launched our first group. We sold out like that because my clientele who trusts me was like, dude, whatever you're telling me, I'm in. We sold out like that. So I just started to create these new things. And the other thing I want to tell you that's coming down the pike that I'm super excited about, and I'm super excited about this for your kids and all this stuff as well, is we created a money software. Okay. And the money software that we created, it's called Money Game. And so the mission of the money software is to actually show people and teach it in a 5th grade level to where somebody can get on the platform and they're trading with fake money. Now, for me, I'm going to use my platform. I'm going to get all the signs because it's based. We have an AI on there called B Money, and B Money is a crypto bee, and he's going to be flying around with his like metallic green, and he's an AI. And so every time somebody wins, they unlock a crypto bee, and the crypto bee can go trade Tesla. And then they win again, they can unlock another bee, and it can go trade BMNR, and they unlock another bee. And so the swarm of bees goes around, and they trade different stocks, and they learn based on your trading strategy. And then they come back and they inform the master intelligence, the queen bee or the king bee, and then they update the trading strategy. So, and all of this is designed at a 5th grade level. It's a game. People have characters. They can buy sunglasses and all this stuff. And I want kids to be able to learn this. So while they're trading or while they're investing in Bitcoin, kids are learning, and it's being explained in a 5th grade language. What is Bitcoin? What is Ethereum? What is this? And they're also playing a game to where they can simulate past trades, so they don't have to sit there and wait for 2 hours, and they can up-level their character, win points, play the game. And then ultimately, people like me who like to trade real money will just use the system and then use my phone to buy and sell. So that's what's coming down the pike. That's what we're doing. I hope this serves you. I hope it's fun. And share this with a friend. Like it, subscribe it. Hope you guys are having a good time. And I hope you guys enjoy the rest of your day and have a great rest of the Sunday and an amazing week coming up. And I hope that the scenario turns bullish for everybody in the price action. All right. Okay. See you soon and have a great rest of the day.